flat, waiting for the monetary policy. So let's discuss what we can possibly expect from the policy and what experts would watch out for. Prasanna, the chief economist at ICICI Securities primary dealer, and Vivek Rajpal, rate strategist at Nomura, have joined us. Gentlemen, good morning. Thank you very much for joining us. Prasanna, what would you really look for? If I remember right, when I polled you, you said a possibility of a 25 basis rate cut. But action apart, what would you look for from the policy?
Yeah, that's right. So we do expect a 25 basis point rate cut. Now, of course, apart from that, obviously, we would watch out for what RBI says on both inflation and growth. Now, last time RBI didn't give out an explicit guidance, so it's possible they continue with that template. In that case, then what they exactly say about the outlook for inflation and growth will matter. And of course, if you recall, I think in the last policy statement as well as the minutes, I think there was a lot of space given to growth and growth concerns and the growth outlook. So it'll be interesting to see what RBI exactly says as the effect of this delegalization or the currency swap on near-term and medium-term growth prospects. The second thing we would look out is on liquidity. And if you remember from April, RBI had a stated policy of shifting liquidity into neutral. Neither surplus nor deficit, but of course post November 8 those calculations have changed, and it's likely that for a long period now the banking system might have surplus liquidity. So whether RBI adjusts its stance accordingly, or are they still going to say they will target neutral, which will have implications, of course.
Okay, Prasanna, just stay on. We have Vivek Rajpal, who also joins into our discussion. Vivek, how high is the possibility of the Monetary Policy Committee perceiving a longer growth shock to the economy because of demonetization, and thereby going ahead and coming out with an aggressive, rate cut of maybe 50 basis points today?
I think it will be a little too early to really assume a prolonged growth shock. My base case would be that they will go ahead with a 25 basis point rate cut and a dovish stance. I think as far as the market pricing is concerned, market is believing that there will be a 25 basis point rate cut. Nevertheless, some probability of 50 cannot be ruled out at the current time.
Okay. Prasanna, good morning. The problem for the Reserve Bank also will be that we'll have, of course, the Fed rate hike as well, which is on the radar right now. And with the with case of rate cut here, do you think there's again a bit of a risk for currency as well of going back to maybe 69.70? That's one risk that a lot of people are talking about.
Yeah, so some of the risk has already played out, right? At least in terms of portfolio flows, if you see there have been outflows from the bond market, which is where I guess a narrowing interest rate differential should first impact, and of course currency is also weakened. But then if you look at the way dollar has moved, and if you take a basket of currencies, I don't think rupee has been adversely affected. Perhaps we are in the middle of the pack. In that sense, I don't think at this point of time there should be too much worry. But yes, so I think that would definitely be one of the concerns in the MPC's mind also, and that is the reason why we don't think they would go for any aggressive action. I think a more calibrated approach at this point of time would be the better option. And also I think the MPC would like to wait for what the government is going to do from a fiscal policy point of view. If there is going to be fiscal easing in the next year's budget, then perhaps a case for further monetary easing should be questioned.
Okay, but Prasanna, what if they don't give you, what are you expecting them to say on growth? Will they say that 7.6 has become 7.2, 7.1? Or if they only say, downward bias or something, what will you take away? As well on inflation, are you expecting them to say not just removing the upward bias to the 5% March inflation, or will they actually guide for 4.8 or 4.6 or something like that?
So frankly, I don't think it matters much whether March inflation prints at 5 or 4.8 or 5.2, right? I mean, a lot of it is water under the bridge now. So what we have to do is look ahead to the next year, and that's how inflation targeting is supposed to work. Now, even if they don't give a fan chart, at least whether in terms of a statement or in the press conference, if there is an indication of how they view next year's inflation, I think that would be important. And I think a similar approach holds true for growth also. I think whether growth slows down in this quarter, and I think it's a given it will slow down, and perhaps there'll be a spillover into next quarter also. I don't think it matters. See, the official government line is that short-term pain for long-term gain, and we also concur with that. So if RBI also sticks to that kind of a message, I think that will be a good enough guidance for the market.
Okay, Vivek, quickly, same question to you. What are you expecting to hear from the RBI on the growth, the trajectory itself? And do you think that they could mention something about the demonetization impact lasting perhaps more than 1 to 2 quarters?
Right. So, I mean, I'll be keenly watching what do they say on the growth and inflation front, especially as far as the impact of demonetization is concerned. My belief is that they will see the growth shock much as transitory, and probably at some point of time, the burden has to move to the fiscal front rather than monetary policy taking all the burden. So my sense is they will take a calibrated approach for now, but they will continue to sound dovish in this policy.
Okay, if they sound dovish and they give you a 25 bips cut, what happens to the 10-year? What happens to any of the yields?
So I think as far as 10-year bond yield is concerned, probably the market is pricing in 25 basis point of a rate cut, no doubt about it. But probably we will stabilize in 6 to 620 zone on a 25 basis point of a rate cut and a dovish stance. I say it will be, it's really a choice at the moment. Even for a banking system, it's a choice between a term reverse repo versus a 10-year bond yield where you need to invest. There is no spread. But as the repo rate moves down, there will be a spread that will be developing. So we will see a good value buying at 620 levels. But again, absolute yield levels matter. And if we are talking about only 575 as a terminal rate, and I think below 6, we should start seeing profit taking. So I think longer end will become much more range bound in a 6 to 620 zone if we get a 25 basis point rate cut and a dovish stock.
Fair point. Gentlemen, we will know in a few hours. Thank you very much for joining us and preparing us for this monetary policy. Well.